Friends, my name is Avinash Agarwal and I welcome you all to Ecoholics YouTube channel. Friends, in this video I'll be discussing with you important current affairs for 8th May 2024. Today we have three topics in our hand. First topic is dealing with infrastructure financing framework, guidelines and regulations in India, which have been put into place by the Reserve Bank of India. So new and updated guidelines have been proposed by the Reserve Bank of India, and these guidelines have caused a lot of discomfort with banks with infrastructure focused NBFCs. So we'll understand what these new guidelines, what these new regulations are. Basically, they are trying to make sure that the credit that gets extended towards the infrastructure sector, it gets extended in a safe, sound and a very prudential manner, right? But at the same time, banks have some legitimate concerns which we'll be talking about. Subsequently, we will speak about the kind of steps that can be taken by state governments to better prepare themselves to face the impact of climate change, especially vis-a-vis the health of their population is concerned. So there is an element of planning involved in this particular article, and I wanted to capture that element of planning. And I also wanted to capture the element of climate change and sustainability, because climate change and sustainability is going to be a recurring theme across a variety of our discussions. So therefore, I wanted to discuss this article. And again, there is a banking focused article which will talk about last year's Supreme Court judgment, which said that if banks declare a particular account or a particular borrower as, let us say, a fraud, then there has to be an element where the person or the account holder concerned should be able to appeal in, let us say, appropriate forums, in appropriate courts against that kind of a labeling such as a fraud. So whether this ruling was right or wrong, when is this ruling applicable? Is it applicable on all the retrospective cases, or it is applicable on all cases going ahead? These are major issues that are causing a lot of problems for banks from an operational point of view. So I'll be talking about that as well. So this is what we'll be discussing today. I would request everybody to please participate in the live chat. So there was a question which was asked in yesterday's live session. I sometimes am not able to see your chats on a live basis, on a real time basis. So I missed some of your chats. So somebody asked that how should we make notes from these particular articles that I'm discussing with you guys, or these documents that I'm sharing with you. How can you all prepare notes? That was one of the questions that was asked. So the answer to that is fairly straightforward, right? The answer to that is that these notes are available with you, right? And I have already highlighted important texts in bold format. You have already understood part of it. So your objective should be that, like for instance, most of these notes are typically 1800 to 2000 words. Every PDF that I am providing to you is 1800 to 2000 words, right? Out of these 1800 to 2000 words, your objective should be that you should bring it down to like 180 words or 200 words at max. That's it, nothing more than that. 180 words or 200 words should be your this thing. So basically, the idea that you should keep in mind is that you have to make sure that you're following the 10% rule. So if you're reading a chapter, bring it down to 10%. If you're reading a report or a current affairs magazine or an article or absolutely anything, bring it down to 10%. Why is that 10%? Because that is the only content that you will be able to revise repeated number of times. And repeated number of times revision is important for the complete download to sit into your memory. And once the download sits into your memory, then you will be able to bring it out in the examination. If you don't follow this approach, if you don't reduce your written notes down to, let us say, 10%, then you will not be able to revise. If you will not be able to revise, you will not be able to reproduce. If you will not be able to reproduce, you will not be able to score good marks. If you will not be able to score good marks, you will not be able to clear the examination. So that entire chain will be broken if you don't make that, or if you don't follow that 10% rule. That is the basic idea that you need to keep in mind. If this is clear to everybody, please type yes right now in the comment section. I want some live chat. I want some participation. I want to see who all are there in the lecture, so that there is a connection between you and me. Like for instance, I know Rashmi, I know Nayan, right? So I want to know everybody who is participating in these sessions. I want to know your names. I want to know the exams that you all are preparing for. I want to know the year in which you will be attempting, whether it will be 2024 or 2025. I want to know everything about you guys, right? It's your right to know everything about me. My name is Avinash Agarwal. I'm an engineer. I'm an MBA. I'm a working professional. I teach as a hobby. I love economics, especially Indian economy, right? So you can ask me anything, and I should also be able to know some things about yourselves. So Charulata, thank you for responding. Rashmi, thank you for responding. I want everybody to have a connection with us. Gagandeep, thank you for responding. I'm still waiting for few more responders, right? I'll come back to you all again. Let us start our discussion. So infrastructure financing norms have been updated. Let us talk about those infrastructure financing norms. See, the idea is that the RBI, they have released new draft guidelines. They are still a draft, right? So they have not yet been finalized, right? These draft guidelines are related to project loans. All right. So these project loans basically are for long-term purposes, infrastructure lending. So if you are building out infrastructure for commercial purposes or non-commercial purposes, then these project guidelines or these project loans become applicable to you, right? The idea of RBI is to improve credit discipline. The RBI wants only serious players to participate in infrastructure lending. Only those banks who have the capability to analyze the projects, understand the projects, evaluate the projects, manage the risks associated with the projects. RBI wants only those kinds of institutions to be lending in this space. RBI doesn't want non-serious players. RBI doesn't want players who don't really understand how the infrastructure business really works, right? They don't want non-serious players to be there in this business. Nevertheless, since these guidelines have come into place, shares of PSU banks, shares of infrastructure NBFCs, they have tanked. What is the idea behind RBI circular? So you have to remember the past. You have to take guidance from the past to be able to understand what is happening in the present and the future. So between 2009 and 2012, banks faced a serious NPA crisis. What is NPA? Non-performing asset. What is non-performing asset? So asset is something that you own. An asset is something that helps generate an income for you. Like for example, your FD is an asset. Your fixed deposit is an asset. Why is your FD an asset for you? Because you get interest on an annual basis from your FD. If you, let us say, stop getting interest on an annual basis from your FD, that means that your FD is not performing. Let's say that I am a batsman in your team. I am supposed to score runs. I am a non-performing batsman if I don't score runs. Similarly for banks, what are assets for banks? So the loans that banks give, that is asset for a bank. Why? Because when bank gives you a loan, then banks earns an interest rate on that loan, correct? And if you don't pay that interest to bank, then that bank's asset is not performing, because bank is not able to earn from the loan that it has given to you. So the simple idea of a non-performing asset is basically a loan which has been given by a bank, but either the bank is not getting interest, or the bank is not getting the principal back, or both of them back, right? So the idea of non-performing asset means that loans have been given, but now those loans have become bad loans, or non-performing loans, or non-performing assets. These are all terms which are synonyms of each other, very close to each other, right? So India was facing, or banks were facing an NPA crisis between 2009 and 2012. Why? Excessive lending had happened to infrastructure firms that started projects, but those projects couldn't be completed. They got stalled. Even if they got completed, the usage was not high. The cash flow from these projects was not good enough for a variety of reasons. A lot of these infrastructure firms took loans that they were not able to service, took loans that they were not able to repay on time, as a result of which the loans that were given by banks to these infrastructure firms, those loans became bad loans, or they became non-performing loans, or they became non-performing assets. Is this clear to all of you? Is this clear to all of you? Charulata, Rashmi, Gagandeep, as well as everybody else. Is this clear to all of you? It's very important. I have deliberately highlighted certain technical terms. I have deliberately introduced their definition in gray, so that everybody who is even a complete first day learner of economics should also be able to have some idea what I'm talking about, right? So a circular came out in 2019 which laid down the frameworks for banks, right? But at that point they did not cover resolution of loans, etc., right? So there is this technical term I want to talk about which is going to be important in this discussion. This technical term is date of commencement of commercial operations. Let us say that you are a builder and let us say that you are building a mall. So there is a date of commercial, there is going to be a date of commencement of commercial operation of the mall, right? What is commencement of operation? Commencement of operation means that active operations have started, that the main function of that principle, the main function of that business has started. So let's say that you had constructed a mall. That means that mall has opened, people are coming in, shops have opened, offices have opened. You are building a hospital, hospital has started functioning, doing what it does. You are building a hotel, hotel has started functioning, rooms have started becoming occupied, right? People are coming and going out of restaurants and so on and so forth. So that is the meaning of commencement of operation. So date of commencement of commercial operations, or DCCO, is very, very important, because boss, if you are a bank and if you have given me a loan, right, so you will get your loan back when the project gets completed on time, gets started on time, it starts functioning on time, it starts earning money, and I start paying you back. So that is why DCCO is important. If let us say that DCCO was May 2024, and then I suddenly call you up on May 2024 and say that, okay, we can't start today because my project is stuck for a variety of reasons, we will start in May 2026, then that is bad news for you, because you would have probably started receiving some amount of repayment back by the end of the year in 2024. Now you will probably get your repayment back in, let us say, 2026 or beyond. So is this term DCCO and its significance for a loan, significance for the banking industry, clear to all of you, right? And I'm again asking this question very specifically. Shreya, thank you for responding. Charulata, Rashmi, Gagandeep, Shreya, as well as everybody else, is DCCO very clear? I don't usually teach slowly, but when the topic is difficult, I slow down, and this topic is difficult for new learners. I have deliberately slowed down. So RBI wants that banks should have a very clear idea what DCCO is at the time of disbursement of loan itself. That is what RBI wants, that you should very clearly have in mind what the DCCO is while you are deciding whether you want to give the funds, while giving the funds. So very long term view is what RBI is asking for, in my understanding, right? Moving ahead, this new guideline, it is basically going to be applicable for a variety of projects, whether infrastructure, non-infrastructure, commercial, real estate, whether loans given by banks, non-banks, or cooperative banks. So you can see that the entire ambit of infrastructure is getting covered over here one way or the other, right? What are the main proposals? Let us start understanding the main proposals one by one. First, please understand the meaning of the term provisioning, right? What is the meaning of the term provisioning? See boss, provisioning means that when if you're a bank and if you're giving money to me, you have given a loan to me, there is always a possibility that I will not repay you. Do you agree? There is always a possibility that I may run away. There is always a possibility that something may happen to me or my business, in which case I will genuinely not be able to repay you. So there is always a possibility that you may incur a loss on the loan that you have given. And what is the loss? That either the interest will not come back, or the principal will not come back, or both of them will not come back, right? So you need to provide a cushion to absorb this loss. You need to provide a solution, a remedy for this loss if it occurs in the future, right? So if let us say you have given me 100 rupees as loan, right? So it is not as if that, okay, you will be so scared, so paranoid that you have given me 100 rupees as loan, so you will set aside exactly 100 rupees, right? That if Avinash doesn't give me this 100 rupee back, then I will use this 100 rupee to cover that loss. No, that doesn't make sense. That doesn't make sense. Why? Because banks earn money by giving loans, so they cannot keep their funds idle. If banks have deposits, what they want to do with that deposit is that they want to lend it out. They want to lend it out. Why do they want to lend it out? Because they earn on loans, they earn interest on loans. So if they have given 100 rupees loan, you have given 100 rupees loan to me, and you have to factor in a loss, or you have to provide a cushion for a loss, you will not set aside exactly 100 rupees to factor in a loss, or to secure yourself from a loss. So you will set aside a small percentage of the loan, right, which is basically like an insurance policy premium kind of. So not all loans will go bad. So let's say that you have given 100 loans, and let's say that you have given 100 loans of 100 rupees each, right? And the idea being that, you know, there is a probability that one out of these 100 loans can go bad. So if you set aside 1% of loan amount of 100 loans, so that means that you have set aside 100 rupees. And if one loan actually goes bad, that means 100 rupees is not collected, then the 100 rupee that you have set aside will take care of that loss. So if your calculations are right, that one loan out of 100 loans will go wrong, right? I have set aside 1% of each loan aside out of 100 loans, and the amount that has been set aside is sufficient to take care of this loss of one loan, right? Then that's fine. That's great. You don't need to do anything more than that. So provisioning is clear. So what is provisioning? Setting aside some funds. So you don't use these funds. You don't lend these funds. You don't invest these funds much. You don't take risks with these funds. These funds have been set aside. So setting aside of funds from a bank's profit to cover potential losses arising from bad loans or NPAs. First and foremost, is the term provisioning clear? If this term is clear, then I will move ahead and discuss around these terms, right? So Gagandeep, Rashmi, Charulata, Shreya, as well as everybody else, is this term provisioning very clear to all of you, right? Is the term provisioning very clear to all of you? If it is clear, then what is RBI saying? Right now, banks have set aside 0.4% as provisioning for a standard loan. Standard loan means a loan which is going absolutely fine. There is no problem in that loan. Interest is coming on time, principal is on time, everything is on time, the loan is healthy, the borrower is healthy, but the business is healthy. There is no problem whatsoever. That is a standard asset. That is a standard loan, right? So on a standard asset or on a standard loan, banks are currently setting aside 0.4% of the loan amount as provisioning. RBI is saying that you have to increase the amount that you are setting aside as provisioning for a standard asset to 1 to 5%. So initially the amount will be 5% when the project has just started, that you set aside 5% of the loan amount as provisioning, and gradually you will bring it down as the project nears completion, as the project tick marks a variety of milestones. Is this point of provisioning very clear to all of you? Thank you for responding. I really appreciate Gagandeep, Rashmi, Charulata, as well as Shreya, if you are there with us. Thank you so much, right, for responding. So this point is clear to everybody. If there is any doubt, please ask. Now moving ahead to the next point, right? Now please understand how lending happens. See, if I come to you and I ask for, let us say, 5,000 crore rupees, you will probably not be able to lend me the entire 5,000 crore rupees as a single bank or as a single institution. Why? You don't have that kind of money sitting around. Maybe you don't want to take that kind of risk where you give such a huge amount of loan to just one borrower, to just one business activity, because anything can happen to just one borrower or to one business activity. I can get stuck, I can die, my project can get stuck, somebody can, damage my project, whatever can happen. It's too much of a risk for you to lend an entire sum of 5,000 crore rupees to just one borrower, to just one project. So typically what banks do is that they form a consortium, they form a group, and that group lends to that project. Okay, so let's say that you are a State Bank of India, you will put in 750 crores into that project. You are an ICICI Bank, you will put another 750 crores into that project. You are an HDFC Bank, you will put another 750 crores into that project, right? You are, let us say, a Kotak Mahindra Bank, you will put 500 crores into that project. You are an Axis Bank, you will put 400 crores into that project. You are an Indian Bank, you will put 400 crores into that project. PNB will put up 600 crores into that project. ऐसे करके consortium तैयार हो, and that 5,000 crores will be collected. Now, what is RBI saying? That, boss, if you are an individual lender and you want to participate as a consortium player, then you should take at least 10% exposure in the project worth 1,500 crore, and 5% or 150 crore, whichever is higher in projects worth more, right? That means that your minimum exposure should be 10% up to 1,500 crores, right? And above 1,500 crore project, your exposure should be minimum 5% of 150 crore, whichever is higher. So banks want to ensure, RBI wants to ensure that all banks have skin in the game. that we are serious about this lending. What typically happens, if you have read articles by Tamal Bandyopadhyay, etc., then they will explain to you what typically happens in banks is that they will, like, let's say that I'm a small bank. Let's not name banks. Let's say that I'm a small public sector bank. I don't have any project evaluation capabilities. I don't have any project selection capabilities. I don't have any project monitoring capabilities, neither technical nor commercial, right? I am understaffed, okay, and overburdened. So what do I typically do? I see that, okay, SBI is forming a consortium for this lending. SBI is a trustworthy character. Okay, let us lend at least some amount of money into this project. Acha, you know, PNB has formed a consortium for this project. Let me lend this much amount of money. This is non-serious way of getting involved in infrastructure finance. If you seriously want to get involved, then put serious money on the table, become serious about it. Nobody has come and told this to me, but based on my reading, why is RBI forcing banks to have a certain level of exposure? Because the moment you start having a certain level of exposure, you will start building a certain level of capability, certain level of resources, certain level of attention to those projects, and that is what RBI wants, seriousness in this business. Is this point clear to all of you? Please type yes if this point is clear. Again, requesting all of you, Gagandeep, Rashmi, Charupriya, I'll take names. I want to know my students' name. I literally have a name diary that every batch that I have taught and every name that I have taken in my life, I note down that name, so that tomorrow if that student connects with me on LinkedIn, says hi, I know that, okay, हाँ, Rashmi Sahu is that person who was used to attend my morning classes on Ecoholics. So ऐसे करके मेरे पास पूरा list है नाम का, right, which is running into thousands of names, right? So names are very important for me. ठीक है? Apart from that, okay, there is a concept of moratorium. For instance, I have taken an education loan to pursue my heavy education loan. I would say that I have taken a heavy education loan to pursue my MBA from IIM Calcutta, right? That loan is worth 31 lakh rupees. I need to pay that loan, right? So my graduation has recently happened out of the program, right? And I have 6 months of moratorium running up to, I think, October. So I graduated in April, which is the 4th month of the year, and I have moratorium up till October, which is the 10th month of the. So it's just a 6-month moratorium period. Why is it given? So that our jobs can start, so that we can find jobs, so that if we have been placed on the campus, those jobs can start and we can start earning. We are in a comfortable position and we start the repayment, right? So typically a moratorium period is given to any borrower so that they can settle into that new role, settle into that new function, start getting some kind of a cash inflow happening for themselves, and once that cash inflow starts happening for themselves, then they can start repaying the banks. That is typically the idea. Banks, RBI is saying that banks can call moratorium on repayment of only 6 months from the start of commercial operations, right? Meaning that you can offer a 6 months of moratorium on repayment irrespective of which project it is. That is where the problem is. As per bankers, I'll discuss the problems going ahead, but that is the idea of moratorium, that you will give a moratorium of only 6 months. Only the operative word, the important word over here is only 6 months from the start of commercial operations. In some cases, let's discuss the problems later on, but this is the provision, right? Then there are another two concepts that I will explain to you. First is net present value and second is credit impairment, and then I will explain what RBI is saying. Now let us say that you have an FD, okay? Let's say that you go and do an FD today. If your principal amount is 1 lakh rupees, you are getting, let us say, 8% interest from one of the NBFCs, leading NBFCs, trustworthy NBFCs, right? And you will get 8% interest on your FD, let us say, per annum. Simple. Let's just keep that simple. So you'll get, let's assume that you'll get 88,000 rupees per annum. Let's just keep it very, very simple, right? For the next 10 years. So you'll get, 8,000 karke aise, 80,000 will come. And then let's say that your 1 lakh rupees will also come back at the end of the 10th year, right? So what you can do is that these are all future cash flows which are going to come in the future. 8,000 multiplied by 10, and then 1 lakh rupees at the end of the year, right? At the end of 10 years, right? So these are all future cash flows. You can find out their present value, and that concept is basically NPV, right? So NPV of an investment is sum of all future cash flows over the investment's lifetime discounted to the present value. Why discounted to the present value? Boss, जो फ्यूचर में सारा कैश फ्लो आने वाला है, if we get that cash flow today itself, so it is going to be discounted. It's not going to be 8,000 into 10 plus 1 lakh. मतलब it's not going to be 1,80,000 exact. It is going to be a smaller amount than 1,80,000. Let's assume that 1,80,000 is going to come back to you over a period of 10 years. Let's assume. I know my calculation is wrong because there is compounding that happens, but I'm just leaving that aside to make everybody's life easier. Okay, I know what I'm doing. So 8,000 into 10 is 80,000 plus 1 lakh. So 1,80,000 is going to come over a 10-year period. If you get that amount today on a lump sum basis, right? So what you will get today will not be 1,80,000. It will probably 1,35,000 or maybe 1,30,000 or 1,25,000 or something like that. Something like that. Why? Why will it be discounted? Because boss, you have gotten it today. आप उसको 10 साल तक if you invest it, right, then it will grow, right? So that is why it is called the net present value, which is what? It is the sum of all future cash flows over the lifetimes, over the investment's lifetime, discounted to the present value. Okay, so this is NPV. So if let us say you are a bank, and if let us say that you are lending money to me to develop an infrastructure project, why will you lend money to me? Maybe I am developing a highway and I am saying that boss, is highway ke upar every month this much toll collection is going to happen, which is going to increase at this percentage. It will keep increasing for the next 10 years, and this is the future cash flow projection for this patch of highway that you are funding. So you get convinced ki ha, this person is asking for X amount of money, there is Y amount of cash flow that is going to occur every month. That Y amount of cash flow will be more than sufficient to cover my interest and principal repayment. Now let me go ahead and fund this project. So what you have basically done is that you have seen what the future cash flows are, you have seen what the payments are going to be like, etc., etc. You have seen what the net present value is. There is a lot of calculation that goes into this, right? So you do all of these things, right? You juggle around with net present value, etc., and you get convinced that yes, this project is worthy of lending. You lend the money, right? For a variety of reasons, right? Let's say that what the RBI is saying is that if there is a reduction in NPV during the construction stage itself, why does NPV get reduced? Maybe because projected cash flows have changed. Maybe when the highway was starting, right? So that highway was the only mode of transport between those 2 points, right? Now suddenly what has happened is that there is a parallel railway track coming up right next to the highway, and there is a dedicated freight train which are going to run on that parallel track. So suddenly the movement of vehicles on this highway will probably come down, because a lot of goods movement which was going to happen on this highway will not happen on this highway. It will happen through the railway track. So suddenly future cash flows have collapsed. Or maybe because there was always a parallel river that was flowing, and now what the government is doing is that since it wants to reduce pollution, so it is promoting a lot of inland water transport, and as a result of which maybe that highway will not be able to get as much toll collection as you are hoping for. Wow, right? So variety of things can change during a project's lifetime, because of which the cash flow can go down. And if your projected cash flows go down, that means your NPV has go down. That can lead to credit impairment. And what is credit impairment? So a financial asset, like for example, if you're a bank, then loan is your financial asset. So financial asset is credit impaired when one or more events have a detrimental impact on the estimated future cash flows of that financial asset. So that, like I explained to you, that let us say that you have built a massive go down to store grains, and suddenly what happens is that farmers in that area, they don't grow grains, right? Rather what they have done is that they have converted their land for production of I don't know, they have just gotten out of agriculture, and that land has been converted into land for urban use or industrial use. What will happen to your go down all of a sudden, right? Gone, right? I'm just giving some random examples, but the point I'm trying to make is that things change, and because infrastructure projects have such a long gestation period, it takes such a long time to construct them, it takes such a long time to earn money out of them, it takes such a long time to break even, that things can change during this 5 years, 10 years, 15-year period. And banks have to be resilient enough to be able to cope with the risk associated with infrastructure lending. That is what RBI is trying to do through these regulations, right? So what are the positives from this new circular? And before I move ahead again, please just type yes if you all have understood everything so far, because I've done the heavy lifting and now everything is going to be very easy from here. I've done the heavy lifting, you have sat through the heavy lifting, you have tolerated the heavy lifting. Now it's going to be easier from here, right? So please just type yes if you all are aligned, if you all have understood. Because why I'm asking again and again, because I'm bothered that bhai sabko samajh mein aana chahiye. It doesn't matter whether your understanding is 100% or 1%, but when you're sitting in a lecture, my duty is that you should understand. Your right is that I should be able to explain to you, right? So what are the positives? So these new rules, so they will push banks, like I said, to undertake project preparation in a more scientific way, to have realistic target for commencement of operations, because commencement of operations is linked with repayment and repayment is very important, right? And like I said, that the DCCO, it should be clearly spelled out and documented prior to disbursement of fund. Date of commencement of commercial operation should be very clearly communicated by everybody involved. The construction party firm should know, the bank should know, everybody should know that okay, this is the date of commencement of commercial operation, right? It is sacrosanct. A lot of people suffer hugely when they buy new homes and then the builder says he, the property is not ready, it will take probably 2 more years. It doesn't work like that, right? What will the impact on bank? So let us first talk about this provisioning part, right? RBI is saying that instead of 0.4%, you have to set aside 5% of the loan amount as provisioning, right? This is, banks say that this will increase our lending rates. If we were charging, let us say 9% interest rate, now let us say we'll be forced to charge maybe 10% or 10.5% or something like that. Why? Because there is a cost associated with higher provisioning. Let me explain what is happening over here. Assume that a bank has a loan book of 10 trillion rupees. 10 trillion meaning 10 lakh crore. Let us say that banks have a loan book of 10 lakh crore, right? And let's say that out of that 10 lakh crore, 15% is for infrastructure lending, meaning that 1.5 lakh crore worth of loans have been given to infrastructure. 1.5 lakh crore worth of loans have been given to infrastructure. Now let us say that banks are being asked to set aside 3% on average, right, for these loans. So what is 3% of 1.5 lakhs? So 1% of 1.5 lakh is 1,500 crores. Therefore 3% is 4,500 crores. This is basic mathematics, right? So 1,50,000 का 1% 10% कितना होता है? 1,50,000 का 10% होता है 15,000. 1,50,000 का 1% कितना होता है? 1,500. So 3% कितना होएगा? 4,500, right? So banks have to set aside 4,500 rupees worth of cash aside. They can't do anything with it. They can't invest it or they can't lend it out. They can't earn from it. They have to set it aside. So this money is waste. This money is waste for bank. It is of no use. This asset is not earning. This is like, UPSC aspirant sitting at home at the age of 28 and preparing for an exam last 6 years, not contributing anything to the family and the society. With no disrespect, I was there. Nobody should be in that kind of a situation, right? That is the problem. Okay. So when you have something which can earn, but it is sitting idle, that is a waste. That is what the bank is saying. That boss, if you want us to keep this money idle, but we have taken this money in the form of deposit from depositors. If this 4,500 crore which is sitting idle on our table, this is somebody's deposit. We need to pay that somebody interest. Where is this money going to come from? We have to pay interest on 4,500 crores to the depositors, right? Who have given us this money. Where is this money going to come from? If we can't invest this money, if we can't earn from this money, then the pending money that we invest or the pending money that we give loans with, we will charge a higher interest rate on that. Is this point clear? Is this point very, very clear? This calculation and this understanding should be very clear to you. That if banks are being forced to set aside a higher amount of cash as provisioning, that means a higher amount of cash is sitting idle. That cash which is somebody's deposit, uske par you will have to pay interest. Where is that interest ka income going to come from? Where is that money going to come from? That money will come from charging a higher rate of interest from other borrowers on other loans. Thank you guys. Thank you for responding again. Thank you. What are bankers saying? Bankers are saying that boss, these kinds of guidelines, if they are actually enforced, it will discourage banks from project financing. It will jeopardize private investment. As it is India के अंदर per capita investment in infrastructure is at a very low level of $90.6 in constant 2015 dollar terms in 2020. As it is, our infrastructure investment growth is only 3.5%. We want the infrastructure investment growth to be higher at 6%. We want per capita investment in infrastructure to be much higher. We want private investments to continue. We want to finance projects. But if you are going to tie our hands so badly, then we will not be able to lend to this critical sector of the economy. Rest you see. That is what the banks are saying. And banks are also asking that who said that this magical number of 5% is correct. Bank is also asking that who said that this magical number of 6 months of moratorium is correct. Where did this number come from? Right. Of course, RBI knows what it is doing, but these are banks' concerns. Okay. Now, very quickly, let us discuss this article, bank frauds. Right. So, our Indian courts are overburdened with cases, and banks are sorry to burden the Supreme Court with one more case. So, see, what has happened is that few large banks, they have moved the Supreme Court, and they have asked some clarifications regarding fraud accounts. So what had happened is that Supreme Court had given a ruling last year, right? And in that ruling, Supreme Court had said that borrowers should be given a hearing before their account is labeled as fraud, right? Labeling somebody's account as fraud is a very big step. If you take that kind of a step, that typically means that nobody else will ever want to do any kind of a banking business with this character. So it's a very big step. It's a very extreme step. So Supreme Court has assumed that banks are probably not giving a hearing, and probably that they are just randomly labeling accounts as fraud, right? So Supreme Court thought that it would be nice on our part to say that banks should give a hearing before labeling an account as fraud. What the problem over here is that Supreme Court probably doesn't understand how a bank operates. A bank manager will think 10,000 times before labeling an account as fraud. Why? Because if I am a branch manager and if I have labeled as account as fraud, the next question is that how was I so stupid, right, that I gave a loan to this account in the first place? Or if I am labeling, let us say, an account as fraud, and my predecessor, somebody who was manager before I was the manager, has given loan in this account, so then somebody will go and ask that person that how were you so stupid that you didn't realize that you were being, cheated, or there was a fraudulent element sitting in front of you, right? So bank managers or bank officials as a community, they know what is the meaning of labeling an account as fraud. They will be extremely careful. Of course, there are mischievous elements who will threaten you that they will declare your account as fraud if you don't make them repayment, even when you are genuinely not able to repay. Those mischievous elements are a separate thing. But typically, labeling an account as fraud is a very serious matter. That is what is discussed over here. Now, what CBI is creating a problem over here as per banks is, CBI is saying that this Supreme Court verdict, right, it covers all fraud accounts with retrospective effect, right? So that means that all accounts which have so far been declared as fraud can probably now start going and, challenging the label of fraud by filing cases in a variety of courts. And banks are saying that no, this ruling was not with retrospective application, this was with prospective application, meaning that forward looking, aage chalte hue, if banks label any account as fraud, then they have to do that only after giving a hearing to the concerned person. This is where the question lies. So banks are saying that no, it is forward looking. CBI is saying that no, it is retrospective, right? And that is where the clarification is being asked. Again, this article is essentially just discussing what I have already described, that banks leave no stone unturned to recover their deposits. They wait for days, weeks, months, years. They try various schemes, various mechanisms to get their money back. And only after everything fails, and only once they are 100% convinced that this person is a cheater, he's having the money, he is having a lavish lifestyle, he's having investments, he's having resources in a variety of different names, but is not repaying our money, that is when bank will take this extreme step, right? So that's the clarification that they're asking. There is one suggestion which is given in this particular article. This article is saying that let us not risk undoing some of the progress that we have made in credit discipline, because the moment you give errant borrowers, mischievous borrowers, nefarious elements, the moment you give them an option, right, that you should get a hearing before your account is labeled as fraud. So what they will do is that they will start demanding hearings in a variety of forums, in a variety of manners, in a variety of courts, saying that it is Supreme Court which has given us this right, that you cannot just declare our account as fraud, you have to give us a hearing, right? So they will prolong the bank's miseries, they will prolong the bank's ordeal, and banks will therefore not be able to do their business of banking. And if these things actually make an impact, then banks will stop taking risks of lending to shaky characters or entrepreneurs or mavericks or innovators who have a good idea, who have a good project, but probably aren't the most secure borrowers, right? So if banks start believing that they can be taken for a ride, then they will start playing it very safely. And if they start playing it very safely, then that is net negative for the Indian economy. It is net negative for innovation. It is net negative for entrepreneurship. It is net negative for risk taking, right? And without risk, there is no growth, right? Keep that in mind, right? This is my last article. States should develop plans to battle extreme weather. Again, it's not a very difficult idea to understand that we need individual plans to combat climate change, especially climate change effect on people's health. So 34 states, they have collaborated with National Center for Disease Control, and they have already submitted plans. 34 states and union territories, they have already submitted plans. Each plan has 4 chapters, that what is the vulnerability, what is the demography, what is the illness, what is the environmental hazard. The idea is that we want to develop adaptive capacity, right? What do I mean by adaptive capacity? Adaptive capacity basically means that I can adjust, I can moderate the damages, I can take advantages of opportunities, I can cope with the consequences, right? So whether it is United States Environment Protection Agency, whether it is NCDC, whether it is WHO, everybody has warned that a variety of diseases, respiratory diseases, heart diseases, pest related diseases and so on will inflict our population. There can be increase in violent crimes and mental health because of extreme weather phenomenon, right? People go crazy, people go desperate, right? So training sessions will be conducted, data will be collected, etc., right? These plans were to be introduced in 2020 itself, but because of the pandemic, these plans could not be implemented, right? NCDC is also working on vector-borne and zoonotic diseases. Vector-borne are typical malaria, dengue type diseases. Zoonotic diseases are typically diseases found in animals which jump to human beings, because human beings and animals, they are more in contact with each other because of deforestation and so on. So these vector-borne and zoonotic diseases are expected to be exacerbated because of climate change. So WHO has also been working very closely with our governments. They are trying to emphasize the health benefits of reducing air pollution, improving water safety, safe management of sanitation services. You know that government of India is very serious about all of these things. We have tap water scheme, we have Swachh Bharat, etc., to exactly extract these kinds of benefits, right? So we are doing whatever we can do. There is a UNICEF report in 2021 titled "The Climate Crisis, the Child Rights Crisis," right? And they have developed a children's climate risk index, and in this index, India has ranked as 26th among 163 countries. Smaller the rank, that means higher the risk, right? So we are at a huge risk. WHO has projected that 250,000 climate related additional deaths will happen every year between 2030 and 2050 because of malnutrition, malaria, diarrhea and heat stress, right? Especially amongst women, children and people with disabilities. UNICEF has estimated that 25% of India's children are experiencing high or extremely high water vulnerability, and that by 2040, 600 million children globally will be facing extremely high water stress wherever they are living. This is my submission to you today, friends, right? Again, 3 articles done slowly and steadily. If you see this entire exercise in its entirety, you will be able to appreciate that we are discussing articles from a variety of segments, sectors. We are covering difficult articles, moderate articles, easy articles. We are breezing through some articles. We are laboring through certain other articles. But if you see this exercise in entirety, you'll be able to appreciate probably that you are developing a sound understanding, and that you are actually benefiting from all of these things. So I would really suggest that please participate in this exercise on a regular basis. I will be sharing this note with my team, and that team will be sharing it with you through our app. So please download our app. do a free registration, go into courses, study material, and in the study material go into current affairs and download these PDFs. I would again request you all to please participate actively in the live chat for the one last time. I can see that approximately there are some viewers over here, good number of viewers over here. So you can probably just say hi or thank you or good morning or something in the comments section so that I can see your names. Like I said to you, names are very important for me, right? So thank you so much, Shreya, Rashmi, Gagandeep, Charulata, for being here. If there is absolutely any doubt, please feel free to ask. Otherwise, I will close this session and we will meet tomorrow again and take it ahead from here. Right, guys? So thank you so much and see you tomorrow and bye-bye. Take care.